What's up, guys? Alvaro here, and welcome to the bilingual stock market channel again. Let's go ahead and talk about some stocks and about the green day, the surprising green day that we had today in the markets. And today we had a very solid and nice clean day across the board on no good news, guys. This morning we got nothing but bad news coming from Target and also coming from the World Bank. So check this out. World Bank slashes global growth forecast to 2.9%, mind you, from 4.1% and warns about 1970s style stagflation. Very, but very bad news. And on top of that, today Target announced they warned that their profit is going to drop because of excess inventory. So in the case of Target, we can make the case that that bad news might be good news because obviously, if they have too much stuff piling up, that might equal selling stuff at a loss in order to get rid of excess inventory. So if some companies or if very big companies such as Target, Walmart, Costco, and so forth start to say that they have excess inventory, they're going to have to start to sell out of a lot of stuff at a discounted price, probably at a loss. And if that were the case, then we are going to start to see the prices of a lot of goods dropping, which is obviously good news inflation wise. But in the case of the World Bank, this is serious stuff, guys. They are worrying about something like 1970s style stagflation. Very bad news, but the market simply shook it off. And mind you, guys, Target is another company out of the bunch that is worrying that they are going to make less money. Microsoft also downguided last week. Tesla also said that they have a very bad feeling about the economy. So the markets, as I just told you guys, simply shook it off today and they ended up going up. So the Russell went up today 1.57%. Nasdaq goes up 0.94%. The Dow goes up 0.80%. And the S&P 500 went up 0.95%. Crude oil keeps on going higher. This is absolutely concerning and unbelievable. I heard some analysts saying today that semiconductor prices, fertilizers, copper, and lumber prices have been dropping. So some analysts are making the case that maybe those, let's say, commodities or materials, since they have been going down, then that might make things even relative to the very high prices that we are seeing of oil in regard to the CPI data report that is coming out on Friday. So what is going to happen on Friday? Is that report going to come out way hotter than expected, maybe in line? And how much of a worse than expected CPI report the markets already priced in? That's another interesting question because many people, many traders, guys, most likely are going to be loading up on puts on Thursday into the closing bell. But according to my experience, and I have been dealing with the markets for something like 5 years, the markets never let us make money or make profits so easily. So since the prices of oil are so high, it looks like a no-brainer, right? Buying puts into the closing bell on Thursday, and then the CPI data report comes out on Friday, way worse than expected. Everything drops, and we end up making a lot of money as soon as the trading session opens, locking in the profit with puts on Friday. But the markets never, and I am going to tell you guys that once again, be careful because the markets never give us money so easily. So let's see what happens next Friday with the CPI report. Gold goes up today 0.60%. Silver goes up 0.74%. The 10-year Treasury yield went down today 2.17%. This is good news for the bulls. You know that whenever the 10-year Treasury yield goes on an absolute tear, that puts downwards pressure over the Nasdaq, higher multiple stocks, growth stocks, and so forth, tech stocks. And we can make the case that the 10-year Treasury yield dropped today because of the news of Target. And as I just told you, if other retailers start to say that they also have excess inventory, then we are going to see prices dropping because when you have excess inventory, you need to sell out of the excess stuff that you have at a loss. So the markets reacted to the news that we got from Target today, putting or bringing the 10-year Treasury yield down. The VIX went down today 4%, and it closed the trading session at 24 points. It is getting closer to a very important spot at 20 points. You guys know that when the VIX is at 20 points, that's some sort of line, a very important technical line, because from 20 points and below 20 points, call options get more expensive, and from 20 points and above, then put options get more expensive. If we take a look at the sectors of the market, energy is still going on an absolute tear, goes up today 2.99%. Let me take a look at energy quickly year to date. 67% up year to date. This is unbelievable. I am waiting, full disclosure, guys, for the Brent, for oil, for the European oil to climb up to $130. And when the Brent hits 130 bucks, I am going to get XLE puts for sure, because I think that oil has gone too far, too fast in throughout this year. Okay, today the industrial sector followed energy, goes up 1.34%. Healthcare goes up today 1.30%. And when it comes to the most important sectors of the markets, technology goes up today 1.19%, and the financial sector keeps on showing signs of life. This is interesting. You guys know, full disclosure, that I got Bank of America calls yesterday, and the worst performing sector today was consumer discretionary, goes down 0.25%. Amazon didn't have a good day today, and this is the most important member of consumer discretionary. If we take a look at the advancers and decliners distribution, we can make the case that we had a very broad rally today, with 4,271 stocks going up and 2,527 stocks going down. When it comes to sorry guys, to the trades that I closed in today's trading session, I only took one day trade. This is my Patreon. Obviously, it is written in Spanish, so you don't understand anything that I say over here. But this morning I day traded Tesla, and I took this trade pretty well, guys. My entry price was very accurate, so I picked up 35 shares of Tesla at $690. I looked in the profit ahead of time, like too quickly. I left some money on the table. It is what it is. But I ended up making, with the trade of Tesla, let me show you over here if I have the screenshot. Yeah, I ended up making $400 with this day trade that I took with 35 shares of Tesla. Now let's go ahead and take a look at the Russell 2000 quickly, guys. Goes up today 1.57%, closes the trading session at 1,919 points. And I told you yesterday, watch out for the Russell, because 1,900 points is a very important spot in technical terms. We are talking about a former support back from late February and also back from late January. So the Russell 2000 looks different relative to the S&P 500 and the NDX, and this is my favorite market leading indicator. And watch out for the bulls over here. The Russell is not even overbought as of now. We can see the RSI sitting at 64 points, and the next important gap that the bulls need to fill over here is going to be up to the 100-day moving average at 1,969 points. If the bulls of the Russell happen to be able to take on the 100-day moving average, they are going to be reconquering a major moving average, which as of now, in the case of the S&P 500 and the NDX, the 100-day moving average is way above the current level of those indices. But if the bulls take out the 100-day moving average, this index is going to start, from a technical standpoint, to reverse this horrible downtrend. that the Russell 2000 has been dealing with since early November. So watch out for this. And obviously, for the most part, whatever is going to happen with the indices is going to depend on the CPI data report that comes out on Friday. S&P 500 goes up today 0.95%, closes today's trading session at 4,160 points. Even this is very interesting. And why? Well, let me show you here a 10-day chart. Take a look, guys. At 4,160 points, the bulls have failed on 1, 2, 3, 4, and 5 occasions. So the bulls haven't been able to hold 4,160 points as support since a long time ago. So now the big question is, are the bulls going to be able to hold 1,160 points as support? If that were the case, let me pull up here the 4-hour chart. The next important spot for the bulls is going to be 4,222 points. This is a previous support back from late January. This is the low of January. If this were the case, watch out for 4,222 points, because this implies, if this push to the upside happens to be completed, this implies that this bull flag pattern that we can easily identify here on the 4-hour chart is going to be completed. And I think that from 4,222 points, we might see another leg lower in the case of the S&P 500. I could be mistaken, but you guys know that I am not really optimistic when it comes to the CPI data report that comes out on Friday. The RSI of the S&P is at 60 points. So let's see if the bulls can complete this bull flag and maybe fill the next gap up to 4,222 points. And obviously, let's see if they can hold 4,160 points as support. In terms of the most important task that the bears are going to have to accomplish in the upcoming days, that is going to be breaking to the downside 4,070 points, which is a support that has acted as such on 1, 2, and 3 occasions in the most recent days. Now let's go ahead and take a look at the NDX. Nasdaq 100 goes up today 0.89%, closes today's trading session at 12,711 points. And in the case of the NDX, guys, we can also see here we can clearly see over here a bull flag pattern that is unfolding until now between 12,900 points as resistance and 12,400 points as support. If this bull flag pattern happens to be completed, then the bulls are very likely to be able to fill the next important gap up to none other than 13,000 points. This is a previous support back from mid-March and also a previous support back from late February. And I think that from 13,000 points, if that level happens to be reached, I am expecting some sort of pullback in the case of the NDX. The RSI of this index is at 59 points, very healthy from a technical standpoint, so the NDX could go either way. Remember, guys, keep a close watch on the 10-year Treasury yield, because if the 10-year Treasury yield keeps on going higher, today it went back, which is good news for the bulls, but if the 10-year happens to go higher once again, you know that is going to put a lot of downwards pressure on the NDX. And now let's go ahead and take a look at AMC. Is AMC back, guys? Is GameStop back as well? I don't think that we are going to see anytime soon any of the unbelievable short squeezes that we saw last year with AMC climbing up to $70, 65 bucks. However, guys, something that caught my eye today is the fact that the short interest of both AMC and GameStop is at the highest level that we have seen in a year. So in the case of AMC, we have a short interest of 21%, very high. And in the case of GameStop, we have a short interest of 23%. So are we about to see some sort of gamma squeeze or mini short squeeze in the case of these two stocks? But case in point, AMC went up today 10% and closed today's trading session at $13.07. And before breaking down AMC from a technical standpoint, I want to take a look at the market structure of AMC. So what's the demand and the supply for AMC shares looking like? So we have a very positive market structure sentiment, as you guys can see over here. It is sitting at 9 points. And take a look at this, guys. We have an increase in demand and a fall in supply for shares of AMC Entertainment. And on top of that, we have once again a very high short interest. So, is AMC a stock that we should be keeping a close watch on? I think so, guys. Not in order to go to the moon, but in order to take a short-term trade. So I am going to be keeping a close watch on this 50 SMA on the 4-hour chart at $12.80 because I think that if the bulls can start to consolidate slightly above $12.80 above this 50 SMA on the 4-hour chart, this might be a sign that they are gathering momentum in order to make another push higher and maybe being able to fill the next important gap up to $14.50. $14.50 is a previous support back from late February and also back from early February. And if we take a look at the RSI of AMC on the 4-hour chart, it is at 52 points. Very healthy from a technical standpoint. This implies that, that the stock of this company, that AMC, is neither oversold nor overbought. And that also implies that the bulls or the apes, they have a first shot of filling this gap up to $14.36. And now let's go ahead and take a look and wrap up the video with GameStop Corporation, which went up today 14.35% and closed today's trading session at $146.50. And now let's go ahead and take a look at the market structure of GameStop. Let's see what the supply and demand for shares of GameStop is looking like. So let's see over here. There you go, guys. Remember, when I told you guys the points of the market structure sentiment, this is out of 10. So in the case of AMC, we just saw a market structure sentiment of 9 out of 10. And in the case of GameStop, we are seeing a market structure sentiment of 10 out of 10. Great. And we can see an increasing demand for shares of GameStop, and we are seeing some sort of falling supply. So the market structure of GameStop looks as well, pretty well, just like AMC. And on top of that, we have once again a short interest that is very high, that is sitting as of now above 20 points. The bulls fell today right at the 200-day moving average at $151. So I'm thinking, guys, and since the RSI of GameStop is at 65 points, that if the bulls can consolidate slightly above $140, we are talking about a former resistance back from late May, and we are also talking about a former support back from mid-April. This might be a sign that they are gathering momentum in order to make another push higher and maybe being able to take on the 200-day moving average, and after doing that, they might be able to fill the other gap, the second important gap, up to $178, which happens to be a previous resistance back from early January. So watch out for this push to the upside, guys, because if we happen to buy calls or pick up some shares near $139, $140, and if this support happens to be held by the bulls, and if we happen to take a trade up to $178, get this, guys. This would be a 21% profit trade. This is nothing but nothing to sneeze at. Remind you, the implied volatility of GameStop is not that high. It is lower than the average volatility of the average implied volatility of GameStop. So this might be a chance in order to get in the casino with some maybe out of the money calls in order to make some bucks, some good bucks on GameStop. And with GameStop, I am going to wrap up this video. Thank you very much for your attention, and thank you very much for hanging out with me once again. Remember, and keep in mind, guys, that here on the Bilingual Stock Market channel, we are posting stock market update videos Mondays, Tuesdays, and Thursdays, 3 or 4 hours after the market closes. So if you want to get all of the notifications of all of our videos in a timely manner, you have to be subscribed to this YouTube channel, but you also need to activate the notification bell right up there. Follow us on Instagram as well, guys, at Bilingual Stock Market. And remember that this is the bilingual stock market channel, the YouTube channel in which we talk about the markets, but we do things differently because we talk about the markets in two different languages, English and Spanish, so you can pick your preferred language. But most importantly, this is the YouTube channel in which we know that the wonderful world of Wall Street is not for geniuses, it is for entrepreneurs just like you guys and myself. My name is Alvaro, and I will see you guys on Thursday. Once again, 3 or 4 hours after the market closes, along with my friend Mario. Mario couldn't film with me today. He had a previous commitment, but I guess that he is going to be with me next Thursday. See you guys. Bye.